If you're like me and feeling down after a recent dip in your equity curve, you may feel that forex trading isn't for me. It is okay. Quit now and save $50,000 worth of your hard-earned cash and 14 years of your life doing things that actually matter. This is what I would do if I were in your shoes. But I'm not, and I persist. 16 years later, I have achieved what I set out to accomplish, but not without some setbacks. If you think the reason why you're in this mess is because you were wrong on the trend and didn't pick the right direction for your trade, I got some good news for you. You actually don't need to be good at trend direction to make money. Yes, you heard me. You don't need to predict trend direction. I've been in this game for almost 16 years, and the only reason why I wasn't making money trading forex in the past was because I was obsessed with trying to be good at trend direction. They say trend is the key. I know it sounds crazy because we're so used to hearing things like, you have to look at the big picture, you have to trade with the trend, and if I trade with the trend, I'll make a lot of money. While that is important, identifying trend direction shouldn't be your top priority in your trading plan. You actually been lied to. In terms of high volatility like this year itself, if you're trying to hit home runs, you'll be hit with a massive disappointment. So in this video, I will be sharing the 3 biggest mistakes I've stopped doing that saw an improvement in my trading account. Let's begin. Mistake number 1. The trend is your friend. Never assume the trend is your friend. Let me give you an example. In this chart, we can clearly see that this is a 200 EMA and price action is moving down. This is a 10 EMA, and we can see that if you are bearish, you would have sold here because of this, or you have sold here. But all these 2 occasions, I would have gotten stop out. So in this chart, we can clearly see that the trend is down. However, it is not respecting the bearish sentiment in this chart. And the reason why I hate doing trend direction is because I had to do a top-down analysis with multiple time frames. So if you hate to have multiple charts on your monitor, on your laptop, you're not alone. I found a quote by Bill Gates, and it certainly suits me pretty well. I choose a lazy person to do a hard job because a lazy person will find an easy way to do it. I'm not a very hardworking person, so instead of doing top-down analysis, I choose to use this whenever I trade. History is your best teacher. The market may be random and almost chaotic, but one thing I learned about the market is that what has happened before will happen again. I've been using this motto ever since. Mistake number 2, using indicators to determine trend direction. If you notice, most of the indicators are not meant for short-term trend. They are meant for days or even weeks. Why do I know this? I started trading in 2006, counting pips, because of a methodology that I've paid $5,000 to learn. Sad to say, it didn't work for me, so I had to do something on my own. I learned everything that is to know about indicators, leading indicators like MACD and divergence, lagging indicators like moving average and stochastic. They don't work, period. Maybe in your mind, they will work. I was thinking maybe they are free, and that is why they don't work. So I went out and bought custom indicators that Google had showed me. I bought every indicator that google.com can help me find. Either they don't work for me or I don't have the patience to make it work for me. Then suddenly it struck me that maybe indicators are not meant to predict price action. They're not meant to predict what the market is going to do next. They only track price levels, or they only track where price has been. Let me give you an example of the first indicator that I like to use, MACD. As you can see in this chart, this is the crossover. This is the bullish trend. The crossover again. This is the bearish trend. If you notice, how many times would you gotten stop out, or how many times you would have missed the trade because you are waiting for the crossover? In this chart, we can clearly see whether you're bullish or bearish. But how many times do you think it would take you to turn into a skeptic when using indicators? For me, it takes almost a decade to realize that they don't work. The best indicators to track price movement so far I've noticed in my 16 years of trading career, this simple but effective tool. I wouldn't be stuck trading forex and not making a profit for almost a decade if I only knew about this tool. What are they? Support and resistance, and effective. I know that a support is formed when price levels get bounced off the ground, either from a big wick or a retest. And I also know that a resistance level is formed when it rejects an invisible ceiling. Deep down inside, there are times where I never know if they will hold or they will break. Let me show you an example. In this chart, you can clearly see the perfect trade setup that all traders wanted. When resistance levels get broken and it turns into a support and the market continue to be bullish until the next resistance level and so on and so forth. You can be a successful day trader just by trading with support and resistance. However, I would highly recommend that you trade above the 1 hour time frame. Anything below will really mess up your screen. Mistake number 3, fixated on home runs. I know most traders will advise to hold profits longer than you cut losses. While this is important, it can be really bad for your emotions. Why do I say this? This is because you have to endure many fakeouts before home runs appear. By then, how many losses can you take before the fear of losing money appears again? Let me show you an example. There are pretty much a few trades that would have. Let's take this chart with MACD as a tool to track price. How many times signal turn out to be fake before home runs appear? The strategy that I'll recommend is trading breakouts. Breakout is your next best thing since sliced bread. The problem with trading breakout is that they don't last most of the time. The good thing, they are almost predictable. The best breakout that I personally use and know is during the New York session. Let me give you an example. This is New York Times. The next best session that I know is Asian session. This is after the breakout from New York session and it continues upwards. The last mistake that I've come across, mistake number 4, no setup in place. Honestly, I never heard about setup. I only know the usual keywords like strategy, signal, and trading plan. Little did I know the word setup is monumental to the way it changes my trading methodology. Let me explain. Do you trade only when you see a big fat candlestick? Do you make the same mistake that I did and jump on it? This is what I would normally do if I see a big fat candlestick. Stop doing this when I realize that you can actually trap the market. There's a way to trap the market, and let me introduce to you my framework for trapping the market. I call this the perfect setup. This is the only framework that I've been using to trap the market. It has been working for me so far. You can flip the chart over if you're bearish. I tend to stay bullish or at least find currency pairs that fit this framework. Let me show an example on how to use this. Let's imagine that you are here. The market formed resistance level and support. We can see that in this chart, a resistance and support is formed and the market breaks over the resistance level. I have a few more examples how my perfect setup can help you in a trading plan, such as when we see a double bottom, hesitation like spinning top or doji, or inside bar, spring, breakout. Example of a gold trade when it tanks. So if you find this video helpful in your trading plan, let me know in the comments below and I'll post more examples on how to trade the perfect setup. I then trade safe.